Finally, traders, some news worth talking about. It seems like this trade war is about to cool off, and that just jump-started a lot of our currencies. Okay, let's talk about it. Roll the intro. Traders, yo, what's up, guys? Welcome back to the Top Trader channel. It's your head trader here, Kleveland Bishop. Hope you guys are having a fantastic start to the week. US session just started about an hour and a half ago, and that overnight session, that Sunday night session, we saw some pretty dramatic moves, okay? Most of our volatility has been seen on that Australian dollar, that New Zealand dollar, and on that Japanese yen, and there is definitely a reason why. Okay, so guys, make sure you are subscribed if you're not. If you're new to the channel, welcome, folks. Extremely excited to have so many new traders here to the channel. I think we just hit 20,000 subscribers yesterday, so that is awesome. Okay, I'm trying to close out on like 25,000 before the year is out. Okay, and always, guys, if you enjoy the content, like the video for your boy. I appreciate it. All right, so here, take a quick look at this screenshot here of the Australian dollar and the New Zealand dollar. You guys will see a massive gap up that happened during the Sunday overnight session, and those gaps didn't even fill. All right, usually when you see gaps up, you get a drying of liquidity up there at those highs, right? There aren't going to be so many people buying at those highs, but there were still buyers up there. And so we saw markets not only maintain the gap, we saw it break higher, and right now we're trading above those levels. All right, and so what is going on? Why is this Australian dollar, this New Zealand dollar, and the Japanese yen soaring at the moment? Well, strangely enough, it has to do with China and the United States, right? Those you would think have nothing to do with Australia, New Zealand, and Japan, but they do. Okay, so what's been happening throughout all of 2018 is this trade war shit that Trump has been screaming about. All right, he's been cracking down on 100, 150, 200 billion dollars worth of tariffs, okay, because China is stealing jobs, right? And so apparently during the G20 summit, Trump and Xi Jinping ended up having some kind of little dinner date, and that cooled all waters to where they literally said recently today, Trump is going to stop implementing more tariffs. Isn't that crazy? Okay, one little dinner, one little speaking engagement, them actually meeting, cooling things down, sparked an entire trade war calamity, all right, stopped it in its tracks. Okay, so again, what happened in China over the past few months? Here's the Shanghai index. You guys can see the Shanghai index from the high of 2018 has been steadily declining, because again, there's so much uncertainty when it comes to markets. You're going to get a dramatic price move. Okay, no one wants to be involved in an asset where markets are very uncertain, where you don't have any type of idea as to what is going to truly happen in terms of an appreciation in that asset in the long term. All right, most people are investing in this market. We're trading. Okay, we're trying to get in and out, but most folks are looking for a place to keep their money, hold their money, and see appreciation. You are not going to buy Chinese assets as long as there's this trade war looming with the largest economy in the world. Okay, so how does that correlate back over with our Australian dollar and our New Zealand dollar? Well, Australia and New Zealand, their largest trading partner is China. Okay, so when purchasing power and there's a slowdown in economic activity inside of China, well, they're going to stop buying products across the entire global economy, right? And so Australia and New Zealand, their biggest purchaser of products is China. So that heavily affected that Australian currency and that New Zealand currency. All right, so this is probably going to be one of the biggest trades, if not it already has been one of the biggest trades all of 2018. You guys can take a quick look. Let's focus in on this New Zealand dollar. Look how dramatic of a price move we see. Okay, in this one area right here, I'll highlight. You guys can notice right there is when there was those beginning talks of the trade war ending. Notice how quickly we exploded back up into structure here, right? So all of that selling happened because these market participants were, again, afraid of what was going to happen in China. It was all speculation, right? Nothing truly has been so impactful that the New Zealand currency drops 8 or 9%. Okay, so that's all just speculation. That's all just emotional fear happening in markets. This is what we teach inside of our macro course over in the Top Trader program. All right, if you guys want to access that, just click the link in the bio. There's some limited free access for you guys. Okay, so all that fear weighed down markets, and then once people see that there's a potential positive outcome when it comes to this trade war deal, you see that entire pushback up into markets. Okay, so now where does this leave us here in 2018, Q1 2019 for this New Zealand dollar, for this Australian dollar? I think Australia still has a lot more upside. New Zealand has almost priced out the whole trade war deal entirely. We'll move over into the charts and we'll talk about it in just a second. Okay, now we also saw the Japanese yen decreased dramatically as well. Here you guys, a quick screenshot. The Japanese yen also had a massive gap. Now, why does the Japanese yen have a gap when all these things are happening? How does it correlate back over? Well, we do know that the Japanese yen still has a negative interest rate. So most Japanese citizens, they repatriate their capital back into the economy because usually their capital is outside of the economy, okay? If you have your money in a Japanese bank account, semi-annually, you're getting a deduction inside of that bank account because the Japanese government wants you to have some type of monetary velocity, right? They want you to be making money, spending money, having your money do work, okay? So they're trying to do that so that there can be more monetary velocity, more inflation inside of the economy. But think about it. Are you going to keep your money outside of the economy when there's all this negative stuff happening? Probably not, okay? So that's why all the Japanese investors repatriate their capital usually back into the Japanese yen. But the opposite just happened, right? We saw Japanese investors go outside of the economy because there's less risk, okay? So the coinage is risk on and risk off, okay? When risk is off, all right, usually you have money repatriated back into the economy. When risk is on, usually you have that capital repatriated outside of the economy, outside of emerging markets, all right? So there's so much to look at. We still have to talk about things like the European Union. We still have to talk about the GDP. So we'll head over to the charts. All right, let's take a quick look. I want to show you what we're looking like from a technical perspective. That was my fundamental diatribe. You guys, fundamentals are so important. Hope you guys are paying attention because that is why our markets are moving. Okay, that is the driver of these markets. All right, and I want to know what you guys are looking at as well. So if anybody comments on the video, guys, I'm gonna be right there to answer away. And guys, again, make sure you like the video for your boy. All right, I really appreciate it. Okay, so guys, look, we're at 20,000. Maybe we'll hit 20,000, 25,000 before this year is out. I am hopeful. Let's pull over to the charts and let's see what we get. All right, traders, let's take a quick look here, starting off with this Euro, USD. All right, I wanna head over to the weekly real quick, just to show you guys where we are in relation to last year, okay, from the entire swing. All right, from the swing low to the swing high, you guys will see that's 104, okay, that's $1.03. And then we traded all the way up until here, the $1.25, okay. Well, subsequently after that, folks, we have seen over a 50% retracement, okay. Now, this is mostly dominated by that US dollar strength, but this is also Euro weakness, okay. So there was a lot of anticipation that the Euro was just going to kill it. And that quantitative easing was going to stop. Remember, QE, quantitative easing, is when you're printing money, all right? And you're usually printing money to add to the inflation, add more monetary velocity, more capital circulating inside of an economy, all right? And that just didn't happen at the speed at which they originally forecasted. So you see all this strength come into the economy. Again, this was also some of the US dollar weakness, but then when we traded back up into this high, markets were not able to sustain $1.25. And Draghi, who's the head of the ECB, he actually mentioned that he does not want to see the market here at $1.25. And then once we started to see more inflation in the US, that's when we originally broke this level and markets came flying down. Now this down move here was actually one of the biggest trades that we actually hit off on in our community in quite a long time. You guys can see that it was just a massive sell-off, and this was a weekly, by the way, only for markets to somewhat consolidate and sit really right around where they are right now. Okay, so if we were to draw up some type of structure and try to rationalize exactly what can happen, you guys will see that we're sitting on something. Okay, we're sitting on something in regards to a major level. All right, here, let's knock that out. Let's actually go zoom out a little bit. I'm going to go to customize list, and I want a little bit more of an actual I want a little bit more timeline. So let's take this to 20 years out. Okay, this is think or swim, by the way, folks. I love think or swim. It's pretty quick. All right, now here you go. We got 20 years out here on the Euro USD, and you guys will see where we are. Okay, so why are markets vibrating around this price level here, $1.13? Well, it's because this was a major structure back in 2015 and 2016. Notice this sell-off right here, folks. This is when the U.S. stopped their quantitative easing policy. Remember, the euro is about to stop their QE policy. So upside, all right, maybe. Okay, so anyway, you guys will see, again, massive push to the upside, massive push to the sell side. Where are we going to go? All right, so right now is right around the time that you may start to see this market start to trade higher. Okay, you have the dollar with one more rate hike before 2018. Obviously, we have one in December. But then after that, we're fearing that we may only have 2 rate hikes in 2019. Okay, and not only that, how much stronger and hotter can this market get? We have GDP at 3.5%. We have unemployment at 3.7. Okay, we haven't been that low since 2000. And then if you're not counting 2000, and we haven't been that low since like the 1970s. Okay, so for us, this US dollar is almost like the strength's been priced in. Or what else could happen? Okay, but when it comes to the euro, so much is weighing this euro down. You have Italy, okay, you have the southern states in general, Greece, Cyprus. Both of those economies have double-digit unemployment. Okay, you have Brexit. All these different things are potentially weighing down this euro. And man, oh man, I'm telling you, if they start to resolve themselves, we will see ourselves back up at those $1.17, $1.18 at a minimum. Okay, we will definitely see a retracement. So it's all about the timing of it. When is this going to happen? Again, we don't know. No one knows. We have to wait for these things to play out. But in the meantime, the best you can do is kind of trade the volatility. Okay, trade some of the volatility that we may see happening. Markets seem like they may stay above this $1.13 price point. Markets have rejected that area quite a few times. For us, if we see any kind of break outside of $14.20 here, this level here, maybe that will give us a precaution to start potentially buying this market back up into structure. Okay, so that's what I'm looking for here on this Euro USD. We'll see what happens. I want to head over here to this Australian dollar and this New Zealand dollar so you guys can see what I was talking about earlier. All right, alluding to earlier here. Let's pull out and let's head back. Let's go to the weekly so you guys can see what the year has looked like. Okay, check that out. This is our year for the Australian dollar, 2018 here, right? When we pull the market down, sell side, boom, we hit off. I'll delete that. And you guys can see that we're sitting right around that 23% retracement. Well, we just broke higher, guys. Okay, and so not only did we just break higher, I mean, we just had so much fundamental data come out alluding to this Australian dollar getting stronger, again, based off of China, that there's still a lot of upside here. Now, take a look at the New Zealand dollar. You'll notice that this New Zealand dollar has really almost already made its move a bit. All right, why is this such a dramatic move relative to that Aussie? You guys can see we're hitting off on the 50% retracement here for the NZD, and the Aussie and the NZD have over an 80% correlation. Okay, they're neighboring economies. New Zealand's very small, so most of its purchasing power and economy is really tagging along with this Australian dollar. So is the Australian dollar lagging? Can we get a potential up move here? Is this market going to sustain this gap? Okay, so we have to 100% monitor this Australian dollar over the next few weeks, definitely before the end of 2018, because in my view, there's no reason why this Australian dollar, before this year is out, shouldn't be back inside of this 38.2, between that 38.2 and 50% retracement level. Okay, so it's really just all about getting an entry, making sure that we're monitoring the volatility the correct way, and we will be taking these trades and looking for these opportunities inside of the Top Trader community. All right, so if you guys want to lock on in and head over there, the link is in the bio. All right, so that's what we're looking like for that Aussie. Same thing with the NZD. It's a little bit different because the NZD has kind of already had its rip a bit. Okay, there might be a little bit more upside possible. Maybe we'll see markets trade back up into the $1.72s. But again, right now, there isn't that critical price area like there is for that euro, right? Think about it. For the euro, we see right here at $1.14, and we can even go into the pips, $1.1430s, $1.1440s. We could start to look for some buying opportunities. Here for the Australian dollar, it's a little nerve-wracking, this gap, okay? Do you want to see the gap fill? All right, are you going to wait that out? Do you think the gap's not going to fill? And so then you'll be taking breakouts higher, okay? You'll make sure, you have to make sure you move stops pretty dramatically and pretty quickly. Same thing here with the NZD. We'll have to keep an eye on it, all right? Lastly, taking a look here at the USD JPY. Let's head over here and let's actually take a look at the CAD JPY. Because the CAD JPY, you can see a little bit better. You can see that gap. Okay, here you go again, another gap to the upside. You also see it on the CHF JPY as well. You see a lot of volatility happening on that pair. So again, CAD JPY, you see a pretty decent sized gap to the upside. If I pull back out a bit, here we'll go to the daily. Again, I'm just looking for the JPY weakness here, right, folks? So if I want that JPY weakness, And if I'm looking at this CAD JPY, well, we're not even at the high of the year, right? So there's obviously still some upside potential when it comes to this CAD JPY. As long as that Canadian dollar maintains some kind of strength, we should start to see that up move. Okay, same thing here with this USD JPY. We are at the high of the year for this USD JPY, but again, if that JPY tends to get a little bit weaker, we should start to see ourselves revisit this high. Okay, so we're going to get way more specific, folks, inside the community, guys. You guys can head over there, and all community members, I'll be talking to you guys soon. Outside of that, you guys know what I'm looking for. Okay, you guys know what I'm looking for. I'd like this euro to the upside. All right, I would like to see the Australian dollar and the New Zealand dollar trade a little bit more, again, to the upside. I want to see some more strength on those pairs as well. And I want to see some JPY weakness, okay? So it's all about getting the entry and seeing if we can get some size on that, okay? So let's see what we're looking at. We have a trader tips dropping tomorrow. We're going to have a midweek market update sometime on Wednesday or Thursday. And we'll be closing out this week with a cool new segment, Top Trader of the Week, okay? We'll be talking about one of the more profitable traders inside of the community this week and showcasing, basically what they were playing, why they played it, and maybe that can help you guys, okay? So guys, I'll talk to you very soon. Your profit, always my motive. Talk to you guys soon.